This is Tony Novak to talk about a few points to keep you out of tax trouble. Let's dive right in. Today's topic is the downsides of great tax planning. So we're moving beyond the fact of staying out of tax trouble. Let's say we've done a great job of maximizing our tax credits and deductions and allowances and strategy, and we're in full compliance. We have no tax risk. But now we have low taxable income, and we have low taxes to pay. That's the result we are trying to achieve, right? Well, there are several downsides that we need to pay attention to. One is Social Security benefits. If you're self-employed or running a business and uh, you don't have a another income, a W-2 income that provides Social Security benefits, your act of reducing your taxable income is also going to reduce your benefits for Social Security. That also carries over to disability. A lot of us are self-employed, don't even qualify for disability, but let's say that you're a corporate employee, your business is a Schedule C, and you normally would qualify for disability benefits, but because you've done great tax planning, reduced your taxable income, have minimal net income to show, that also reduces your uh, taxable income. A little story to share there. Uh, Years ago, I wound up in a pretty serious accident. I wound up in the hospital, and I had put in a disability claim, and I was, of course, self-employed. And the insurance company actually hired a CPA firm to do a forensic examination to see what was I really earning versus how much did I lose when I was in the hospital and unable to work. The CPA actually produced a legally credible report that said I earned more when I was in the hospital than I did when I was working. The reason is when I was working, I was paying bills. Bill would come in and I would pay it, and I would hire people and pay for marketing. When I was in the hospital, the money just came and sat in the bank account. It came in automatically through the checks and whatnot, payments from different companies, and I wasn't spending it. So they actually prevailed on that legal argument. Okay, that's enough of a diversion. The other disadvantages of great tax planning, one came up yesterday, which is why I put this topic in. A very successful business contractor is growing rapidly, taking on a new six or possibly seven-figure contract, and needs to hire additional guys, additional crew, and purchase an additional vehicle. Well, goes into the dealership, and we just purchased vehicles last year when we wrote those substantially off last year, and a lot of big startup and expansion expenses. So his net taxable income was very low. And guess what? That's not a good thing when you're talking to the auto finance person. He did get the vehicle and did get it financed, but at much less favorable terms than a person who walked in with high W-2 and no debt would have received. So that's another downplay. And then a third is many of us do, myself included, reduce our taxable income through real estate, and there's a lot of strategies we talk about on other days of using real estate to get your taxable income and your taxes down lower. But it also means that you'll have a more difficult time qualifying for a mortgage the next time you try to get one. So that's a third issue, and I would say that that's a specialization, almost a area of expertise all in itself, how to qualify for additional real estate financing when you're already loaded up with real estate. All right, that's enough for today. Thanks for joining. If you have a specific topic that you'd like to see covered, please send a message. I welcome any comments or feedbacks on the show, and I will be back tomorrow for another tax